Welcome to the most deleted, shadow banned, demonetized, censored, and trolled channel on social media. Recipient of the Patriot Warrior Purple Q Award. Hello, this is Dave from N4Truth USA, Inglorious Patriots. It is February 1st, 2026, and the time now is 12:27 p.m. Eastern Time here in beautiful southern North Carolina. The last few videos that I've made dealt with the financial markets, particularly the precious metals silver market, which is and has been a fraud for many, many years. I worked on Wall Street and on Wall Street West for 25 years, taking service calls for IBM and Pennant Systems. In that amount of time, I have been exposed to every brokerage and banking firm on the planet that has any influence in the markets whatsoever. And let me tell you a little story. I always knew there was something fishy about the stock market and about the commodities market, because without knowledge, you still get the hairs on the back of your neck standing up when you hear something. I had a good broker friend in a large brokerage firm, which I will not divulge. This was a long time ago. This was late 70s, early 80s. And he introduced me to a thing called the Profit Strategy Letter. And it was written by a Southern Carolina gentleman by the name of John Holmes, who has since long ago passed on. And what the Profit Strategy Letter was a newsletter about penny stocks, about stocks that you can buy for under $1 that were initial public offerings that showed promise. So I read the letter for a while, and the broker said to me, "You got to get this stock. This is going to be like McDonald's, like getting in on the ground floor of Microsoft when they first started." And the name of the stock was Carolina Space Stations. And what it was a fast food restaurant that supposedly would take your order on a selection panel, and it wasn't touchscreen, it was just like push buttons for what you wanted. And when your order was filled, instead of going up to the counter and getting the order, like a little robot, like R2-D2, would walk out with your tray and walk to your table where you had a number table, and you went, and it would hand you the food. And that would be great for the kids would love this shit. So the stock was, you buy a share, and a share was a share of stock, an option to buy a share of stock at a future date, and a warrant to buy the stock for $1. So I bought 2,000 shares just for shits and giggles. I had a quote trick. It's like a little thing that give you the stock price as it happened. It was on the FM radio subcarrier, and you carry this thing around, and it would tell you what the stock price was, whatever stock you programmed into it. And it would alert you whether the stock was up or down or whatever. You could program the thing to, penny stocks were on the NASDAQ. So I bought 2,000 shares of Carolina Space Stations, and the day it opened, it doubled. And the day after that, it almost tripled. So I called the broker. I said, sell. And I walked away with $11,000 in profit from 2,000 shares of stock that I bought for $2,000. And I said, this is easy money here. But something wasn't right. Because it came to pass that after a while, this company went out of business. Why did it go out of business? It was just a great concept. There was no fundamentals to this company at all. It was just somebody's idea. He wrote it down on paper. You know, put a LLC on his company or whatever, and he went on the NASDAQ and offered the stock. The stock wasn't worth a shit because there's no way to implement this thing, this concept that he had. There was no robots. There was no proof of a concept. Okay? No. Also, a large brokerage firm, which I won't name, had an entire floor of computers. Now, 1979, 1980s computers were freaking huge. Took up entire floors. I took a service call there, I was talking to the brokers, and they're all sitting on their chairs at their terminals talking football. And I asked, I says, you know, not for nothing. That's all you fucking guys do? Just talk about football and who's going to throw the ball and who's going to do the touchdown and who's going to win the Super Bowl. That's all you do all day here? He says, yeah, that's all we do. I said, well, you got to figure out who's going to win the Super Bowl because that determines whether we have a bull market or a bear market. And I said, that doesn't make any goddamn sense. And he says, yeah, it shows me the statistics. 30 out of 31 times for the last 31 years, this has been true. So if you own a portfolio of Fortune 500 stocks, and you can know in advance whether it's going to be a bull market or a bear market, you don't have to have any information on any of these companies at all. You know that the trend is up. You're going to make money if you go long, and if the trade is down, you know, if the market is going to go down, you're going to make money on the shorts. Simple. And it became a self-fulfilling prophecy because all the brokers were doing it. Now, there's a couple of people on their tube promoting this thing about following Nancy Pelosi's stock picks because Nancy Pelosi is better than Warren Buffett picking the stocks. That's a fact. Okay? So now if you know what Nancy Pelosi's going to do and you follow it, you're almost guaranteed to make money. Almost guaranteed to make money because Nancy Pelosi doesn't buy stocks to lose money. She's got inside information and she's using it to make money on the stock market. Insider trading. And that's a known fact. Everybody knows that. So, if you follow Nancy Pelosi, what are you doing really? First of all, you're making Nancy Pelosi money because when she buys the stock and you see that she buys the stock and you buy the stock's going to go up. Self-fulfilling prophecy. But you're using inside information just like she is. She's not telling you, but you're finding out because it's public information who's buying the stocks. So that's what the commodities exchange is. It's self-fulfilling prophecy, and that's what happened on Friday. Everybody wants physical metal. This and this here, see? This here, silver bond. I got a bunch of them that I bought years ago. Okay? And these, I got a bunch of these. What the hell are they? Alright? These are little break-off silver bars. Okay? This can't be arbitraged. This can't be manipulated. When somebody wants this, and I got it, you're going to pay the price that I want to sell you for. If you don't give me the price, I ain't going to sell it. And you can bang down the price on paper if you want to, but when you want the actual physical metal, you're going to have to come up with the price that I'm willing to sell it for. I'm not going to spend thousands of dollars on paper for a promise that you can negate anytime you have a feather up your ass. But I'm telling you right now, if you don't have this in your hand, you don't own nothing. You own vaporware. just like physical money. Physical dollar bills are just paper. They literally aren't worth the paper they're printed on. That's why everybody's buying silver and everybody's buying gold, because paper money is worth a lit fart in a wool mitten. Bitcoin, any cryptocurrency, what do you have? You have a digital thing in your phone that you can't spend unless you type in your password and all that stuff. Now, if the internet goes down, say you had, just for shits and giggles, say you had a credit card that was Bitcoin. Bitcoin credit card. Doesn't exist. Then you could go into Dollar General or Lowe's or Walmart or your local neighborhood hardware store or grocery store and pay for it just like you paid with a debit card or a credit card. Say that happens. You have a credit card with Bitcoin. So you go into the store and buy something with Bitcoin. Fine, everything works until the internet goes down or until the power goes out and there's no power to run the cash register that reads the credit card. You're screwed. And how do you know who controls the Bitcoin algorithm, what they call the blockchain? Now, I'm not going to sit here and pretend that I know everything about the blockchain, but I don't need to know. I don't need to know anything about the blockchain to tell you it's bullshit. It's total vaporware, fiat currency without the fiat. If you lose, I know a guy who's lost his password to his account, his 12-word pass, he's screwed. Hundreds of thousands of dollars of Bitcoin sitting there in an account that he can't get to. See, if you got $10,000, $100,000 in the bank, and tomorrow you log on to your account and it says zero, guess what? You can go to the bank. You can go to the physical brick and mortar banks and give me my fucking money. I don't want your money. I want my money. But you can't do that with Bitcoin. And I think Bitcoin is a bigger scam than the commodities market. That's just my opinion. But do you know who runs your Bitcoin account? Do you have a person or a bank or physical building that you can go to? Do you even have an email that you can say, hey, listen, this account that this thing that I gave, it was a fraud. Could you back that thing out for me? If you had a credit card and you bought some stupid shit that didn't meet expectations or was fraudulent, that's another story. eBay is selling fake silver. Don't buy nothing off of eBay. I'll get to that in a later video. Don't buy nothing off of eBay. I start two people on eBay selling fake shit that I got here, and right now I got the secret. I got the money back from eBay because eBay guarantees you, if you buy something from them and that you can return it. I don't want to return it. I got the Secret Service involved in this shit. All right? So Don't buy nothing from eBay. eBay, they're buying shit from China. It looks just like the real thing. In fact, China has a whole factory manufacturing fake silver bars. They look authentic. They pass all the chemical tests. They pass all the sound tests. The only test they can't pass is when you have a silver bar, like a kilo silver bar, which is like this big. The inside is tungsten. Passes the test. Scratch it on a stone, put the acid on it, turns red. Oh, it's silver. Take a drill and drill a hole through it. As soon as you get that tungsten, beep, the drill breaks because it's fake. Just like Bitcoin is fake. They get everybody to buy Bitcoin, or money goes who the hell knows where. And then when they got enough billions of dollars invested in this shit, they just turn the fucking thing off. How the hell do you know? You don't know where that money goes. You don't have any way of recovering it. Yeah, it's good if you trade back and forth, and you bought it when it was $1, and now it's, was it 90,000? Who knows? You made a lot of mucking funny. But when the bottom drops out and you got your whole retirement account in Bitcoin, which is like a fart in the wind, you're screwed, because there ain't nobody you can go to. So if you don't have silver, this is the best form right here, because even if the shit hits the fan, you can, I don't know if you can see this, they're all little bars that you can bust a little piece off. Hey, give me a loaf of bread. Give me a gallon of gas. When the shit hits the fan, this is the only form. It's called a Vicambi Swiss Combi Bar. Let's see if I can get it on the camera here. All right, this is the shit hits the fan silver, and this is the retirement. I got 20 or 30 of these 10-ounce bars. So that's the only real money on the planet. The only real money on the planet. Been money for 5,000 years, going to be money for another 10,000 years. Now, this guy, John A.G., I've been listening to him for a while. He knows his shit. I know for a fact that he has called it on the money every time. Here's a couple of his videos. He's got like, I don't know, 20, 30 channels. He's all over the place. But I'm telling you right now, if you own paper, anything, it ain't worth a lit fart in a wool mitten. This is Dave from Net4 Truth USA, Inglorious Patriots. Thank you for watching.
I need you to cancel your plans. I need you to stop what you're doing right now and focus. I need you to understand that while you were sleeping last night, while you were thinking about your weekend activities, the informational backbone of Western finance experienced a catastrophic disruption. It did not collapse in a spectacular fireball that would make the evening news. It did not announce its death with sirens blaring and headlines screaming. It simply went silent. It flickered and went dark. And in the world of real-time settlement systems, in the universe of high-frequency trading and instantaneous reconciliation, silence is not peace. Silence is not a technical pause. Silence is absolute terror. Silence means the numbers stopped adding up somewhere deep in the machinery, and somebody, somewhere, made the decision to pull the emergency brake and hide the wreckage from public view. Ladies and gentlemen, this is the Asian Guy. It is Saturday, January 31st, 2026. The trading desks on Wall Street are empty. The floor brokers have clocked out and gone home to their families. The screens are frozen. The markets are officially closed. This is supposed to be the dead zone of global finance, the boring, uneventful 48 hours when the machines run their automated reconciliation processes and the clearinghouses settle the accumulated trades from the week. It is the time when the financial plumbing does its invisible job in the background without anyone paying attention. But today, right now, the plumbing is not just clogged. The pipes have catastrophically burst. And what is leaking out onto the floor is not water. It is the toxic secret that the entire precious metals market, the backbone of hard asset wealth, has been running on fumes and falsified records for longer than anyone in a position of authority wants to publicly admit. We have been monitoring the data streams from the CME Group, the Chicago Mercantile Exchange, for the past 6 hours straight. This is the most critical price discovery mechanism on planet Earth. This is where the world determines what gold costs, what silver costs, what the fundamental value of hard assets should be. And for the last 6 hours, we have been repeatedly attempting to pull the daily delivery reports. We have been trying desperately to access the issues and stops data, the sacred document that tells us exactly who demanded physical metal and who actually received those bars into their vaults. This is not optional information. This is the foundational data that proves the system is functioning. And what are we getting back from this supposedly infallible CME infrastructure? We are getting blank fields where numbers should be. We are getting outdated timestamps that make no sense. We are getting cryptic error messages. We are getting a digital void, an information black hole precisely where there should be mountains of verified, time-stamped, legally binding transaction records. Do you believe in accidents? Do you honestly, genuinely believe that the most heavily funded, most redundant, most obsessively secured financial infrastructure in human history just happens to experience a catastrophic reporting failure on the exact same weekend that silver prices suffered a 26% intraday crash from their recent highs? Do you believe timing like this is pure coincidence? Because I do not believe in accidents. I do not believe in coincidences of this magnitude. I believe in cover-ups. I believe in controlled demolitions designed to hide evidence. And what we are witnessing right now is the digital fingerprint of the largest precious metals fraud in modern history being hastily erased before Monday is opening bell. Let me explain in detail what is missing, because this is critical. Every single trading day without exception, the CME publishes two fundamental data sets that form the bedrock of market transparency. First is volume, which tells us how many contracts changed hands during the session. Buyer met seller, transaction completed, money exchanged. Simple arithmetic that anyone can verify. Second is issues and stops, which tells us how many of those paper contracts actually converted into physical metal leaving the warehouse. How many traders looked at their contract and said, "I do not want your promise anymore. I want the actual bar delivered to my vault." These two numbers must reconcile perfectly. The mathematics must balance to the ounce. If 1,000 people stood for delivery and demanded metal, then the report must show exactly 1,000 issuance notices. No exceptions, no rounding errors. But for 14 consecutive trading days leading up to this weekend, we have been watching something that should be mathematically impossible unfold before our eyes. We have been seeing volume data that suggests absolutely massive, unprecedented delivery demand. We have been seeing open interest numbers that imply tens of millions of ounces moving from paper promises into physical custody. But the issues and stops report shows either nothing at all or numbers so absurdly, impossibly low that they violate the fundamental laws of market mechanics. And today, the climax, the report simply froze. It did not update. It did not publish. The CME called it technical reporting issues. That is corporate language. That is the carefully chosen phrase you use when you cannot publicly say, "We have lost complete control of the ledger and we no longer know who owns what metal or where it is." You might think it is just a software bug. But the CME spends billions on redundancy systems, backup servers, and cybersecurity that would make intelligence agencies jealous. It does not just have a glitch, especially not on the weekend of a 2 million ounce delivery cycle in the middle of the most violent price dislocation in precious metals history. This is not incompetence. This is concealment. And to understand what they are concealing, you have to look beyond the sanitized official press releases. You have to look past the bland corporate statements. You have to look at the whispers circulating in the intelligence sector, the encrypted conversations happening on secure channels, about a state-sponsored hacking collective known by the codename Salt Typhoon that has been methodically infiltrating American critical infrastructure for months. Not just the telecom grids or water facilities, not just the obvious targets that make headlines, the financial settlement layer, the beating heart of the system. Here is the theory that is surfacing on encrypted channels where the real analysts operate, the ones without corporate masters to appease. What if Salt Typhoon did not hack the CME to destroy it in some dramatic, headline-grabbing cyber attack? What if they infiltrated it to systematically drain it of physical assets? Think about the strategic brilliance. You penetrate the matching algorithm, the core code that determines which buy order gets matched with which sell order in the queue. You insert a ghost protocol, an invisible subroutine that silently prioritizes your delivery orders above everyone else's. You extract physical metal from registered vaults, bar by bar, and move it into accounts controlled by shell entities with anonymous ownership structures. But simultaneously, you suppress the reporting mechanisms. You manipulate the data feed so the vault inventory numbers look stable, look normal, while you're actually bleeding the system dry. The security cameras play a loop, showing business as usual while you load the trucks in back and drive away with the treasure. This explains the glitch. The CME cannot publish accurate reports because when they reconcile the database with physical reality, the numbers do not match. The computer says 50 tons of gold should be in the registered category. But the actual vault count found significantly less. The algorithm is crashing because the map no longer matches the territory. They cannot publish the report. If they show the sudden unexplained vanishing of eligible inventory, it will trigger an instantaneous global bank run. So they declare technical issues, they buy 48 hours to either locate the missing metal, fabricate ledger entries, or beg the Federal Reserve for an emergency bailout. But while they scramble, the market is already smelling blood. When a clearinghouse hides its numbers, it means the clearinghouse is insolvent. And the proof this is structural fracture rather than a simple error is visible in the price chaos. The spread between gold in Mumbai and gold in New York has exploded to $283. That is not a spread. That is a canyon. That is the market screaming that the bridge between the paper market in New York and the physical market in Asia has been severed. We need to understand this spread. We need to examine why arbitrage has died. And we need to prepare for what happens on Monday morning when the world wakes up to the realization that the global price of precious metals no longer exists. There is only a New York price and an Asia price, and they are no longer speaking to each other. For 90 days, the cybersecurity industry has been on fire with warnings about massive infiltration of American infrastructure. Water systems, broadband networks, power grids. The media called it prepositioning, planting logic bombs to shut down electricity if war broke out. But analysts missed the real target, the settlement layer, the financial nervous system processing trillions in assets daily. Here is the nightmare scenario terrifying Wall Street this weekend. What if the CME blackout is not malfunction, but deliberate feature? What if Salt Typhoon breached the exchange, not to destroy it, but to loot it from inside? The rumor is hackers compromised the delivery notice algorithm. They created a backdoor that allowed them to issue legitimate delivery demands for physical bullion while suppressing reporting to risk oversight systems. They told the vault to release gold bars, but told the surveillance system nothing had moved. For 2 weeks, while data showed minor irregularities most ignored, staggering quantities of bullion were quietly retitled into private shadow accounts controlled by offshore shell companies. They drained the reservoir while the gauge showed full. This is why the CME went dark today. They likely ran a physical inventory audit and discovered the spreadsheet did not match reality. The computer said 5 million ounces of gold. The actual shelf count came up catastrophically short. The technical issue is the cover story while they desperately figure out where the metal went. They shut down public reporting because publishing actual numbers showing sudden multi-million ounce discrepancy would detonate global panic. So they pulled the plug. They bought themselves a weekend to find the missing metal or construct a plausible lie. And why would a foreign power risk such brazen economic warfare? Because this is already war. If the United States deploys financial weapons to destabilize rival economies through currency manipulation and tariff pressure, the adversary needs asymmetric counterstrike. Draining the COMEX is that weapon. By stealing the physical collateral underpinning Western financial architecture, they force a default and prove the emperor of dollars has no clothes. This recontextualizes everything. The $283 spread is not just inefficiency, it is the market pricing in the theft. Sophisticated money knows the metal is gone. They know registered inventory numbers are fabricated. Every paper contract trading in New York is now backed by nothing. Claims on a raided vault. The cyber conflict evolved from stealing information to stealing atoms. If this theory proves accurate, Monday morning is not a volatility event. It is a crime scene investigation. And that brings us to the mathematics. Mathematics does not care about press releases or technical difficulties. Mathematics only cares about equality. And right now, the fundamental equation holding the financial system together, the equation saying price in location A must equal price in location B, has returned an error. We are staring at a $283 divergence that should not exist in any functioning market. Let me show you the scoreboard as of Saturday evening. After hours, electronic desks and physical bullion networks are still quoting prices. The divergence widens every hour. In New York, the paper price of gold hovers around $5,200 per ounce. But in Mumbai, the physical price, the actual cost to hold a kilogram bar, trades at $5,483. Subtract those, $283. In a normal functioning market, we have high-frequency trading firms, massive institutions that invest hundreds of millions of dollars to lay dedicated fiber optic cables across entire oceans just to reduce their data transmission latency by 3 milliseconds. 0.003 of a second. That is how competitive this game is. They operate sophisticated arbitrage bots, automated algorithms that scan global exchanges constantly, 24 hours a day, 7 days a week, hunting relentlessly for any price discrepancies they can exploit. If gold is even 1 penny cheaper in New York than it is in Mumbai, the bot instantly, faster than you can blink, buys in New York and sells in Mumbai. It captures that 1 penny of profit with zero risk, pure arbitrage. It executes this exact trade millions of times per day, billions of dollars in volume. It is literally free money. It is risk-free profit harvesting at industrial scale. So if there is a $283 difference sitting wide open in the market, exposed for everyone to see, what should theoretically happen in a healthy system? Every single algorithm on the planet should be screaming bloody murder. Every hedge fund, every proprietary trading desk, every quantitative shop should be backing up the proverbial truck. They should be buying New York gold with maximum leverage and selling it in Mumbai until the price differential snaps shut like a rubber band. The spread should collapse in seconds, maybe minutes at most if the systems are slow. But it has not collapsed. It has been sitting there, gaping open for 6 consecutive hours now, staring at us, mocking us. Why? Why is nobody picking up the $283 bill that is lying on the sidewalk in broad daylight? Only one explanation. You cannot move the metal. Arbitrage requires 2 steps. Buy the cheap paper contract in New York. Stand for delivery, take possession, ship to Mumbai, and sell for higher price. Algorithms attempt step 1. They slam into a wall at step 2. The computers know if they purchase the New York contract, they will never receive the gold. They understand technical issues means insolvency. You cannot complete the arbitrage. The bots have been switched off. Liquidity providers evaluated non-delivery risk and determined it is infinite. Arbitrage is dead. When arbitrage dies, the global market dies. We no longer have unified global price for gold. We have a New York price, fictional, and a Mumbai price, real. The United States market has become an isolated island, and this is not limited to gold. Examine silver. The spread between London spot and Hong Kong physical has exploded to $13 per ounce, more than 10% of base price. Under normal conditions, the spread is 10 cents. $13 is apocalyptic. The metal is physically trapped. Silver in Hong Kong is hoarded behind an impenetrable barrier. The flow is stopped. Velocity of capital hit 0. This is systemic cardiac arrest. The blood, liquidity, no longer pumps to the extremities, the exchanges. When blood stops flowing, tissue dies. We are watching the death of the paper pricing mechanism in real time. The $283 gap is the insolvency premium. The market charging you enormous fees to compensate for risk that the United States financial system is genuinely bankrupt. But why now? Why did arbitrage break today? Why is metal trapped in Hong Kong? This is legal warfare. We need to examine the justification Asian banking institutions use to prevent metal movement. We need to discuss Hong Kong and a new regulation effective January 1st, granting authorities power to lock vaults under cybersecurity pretexts. The reporting blackout in Chicago is only half the trap. To understand why arbitrage is dead, why the $283 spread refuses to close, examine the other side, Hong Kong. While the CME is dark due to technical issues, major bullion banks in Hong Kong suddenly decided this weekend, mid-global liquidity crisis, is perfect for system upgrades. Reports from Asian traders confirm HSBC Hong Kong and several major custodial vault operators effectively froze operations. Attempt to withdraw physical silver today? Request denied. Try to allocate gold bars for international export. System shows pending indefinitely. Official explanation is emergency cybersecurity maintenance and compliance updates. Sounds mundane, routine procedure, but this is not maintenance. This is financial siege. We need to examine legislation that slipped beneath the radar but has become the most powerful document in global finance. The Protection of Critical Infrastructure Ordinance. Full enforcement January 1st, 2026. Grants government authorities sweeping emergency powers to seize control, shut down, or freeze any system classified as critical infrastructure during declared cybersecurity threats. What qualifies? Financial clearing systems, precious metals vault networks, digital settlement layers, connect the sequence. Cyber attack allegedly by Typhoon strikes United States financial system. CME goes dark. Authorities in Hong Kong declare elevated threat levels citing global cyber instability. They invoke the ordinance, instruct banks to lock down, no digital transfers, no physical movements, claim they need comprehensive audits to ensure no malicious code penetrated vault management software. Perfect legal camouflage. Not defaulting, not announcing we lack silver that triggers panic and bank runs. Instead, claiming we are protecting you, securing against foreign hackers, just pausing withdrawals from malware scans. Brilliant. Stops the hemorrhaging without admitting they are bleeding. China effectively nationalizes every ounce of silver in Hong Kong facilities. Metal checks in, does not check out. Financial Roach Motel. This is why the spread is $13. Market understands silver in Hong Kong is trapped behind digital iron curtain. London traders scream for physical supply, willing to pay premiums. Hong Kong vault managers point to screens displaying system lockdown, shrug helplessly. Cannot open the door. Government requires malware completion first. Meanwhile, metal is quietly retitled from Western custodial ownership into Eastern strategic reserves, while surveillance is offline. Timing undeniable. United States reporting goes dark. Same weekend, Hong Kong implements vault lockdowns. Coordinated pincer movement. West conceals empty vaults by shutting transparency. East locks gates on accumulated hoard. Trapped in middle is global supply chain, suffocating. No liquidity, no flow. Overnight transition from just-in-time delivery to just-in-case hoarding. Consider Monday implications. Short sellers, hedge funds wagering against silver, experiencing absolute terror. To close short positions, to exit, need to deliver physical metal or buy contracts back. But where to acquire metal? Cannot source from CME. They lost data and probably inventory. Cannot source from Hong Kong, under emergency maintenance. Trapped inside burning structure with no exits, pressure building with no release valve. Since no physical mechanism to equalize price, only variable that can adjust is paper price. Must move vertically to reflect asset has become unobtainable. We are staring at potential force majeure declaration, legal terminology for act of God. Clause in commodity contracts stating if we cannot deliver metal due to unforeseen circumstances like cyber attack, we are not obligated. Simply pay cash settlement instead. But what price? Fraudulent New York price of $5,200? Or authentic Mumbai price of $5,483? Litigation over settlement price will be bloodiest legal war in financial history. Commences when opening bell rings Monday. $283 spread. Shattered reporting system. Operational shutdown in largest physical hub in Asia. Market waking to horrifying realization the hack was not accident. It was opening move of a reset. What happens when electronic markets resume Sunday night? When algorithms comprehend liquidity reached absolute zero? We need to forecast. Prepare for violent repricing. This brings us to moment of impact. Currently sitting in Hurricane Eye, Saturday night. Markets frozen, screen static. CME website displaying reporting errors. Hong Kong vaults locked for maintenance, but clock advances. In less than 24 hours, when sun rises over Wellington, an electronic Globex session initiates for Sunday night, the financial world unpauses. And when it unpauses, will not resume from where it stopped. It will snap like overstretched rubber band. Understand blocked market physics. Normally, financial pressure releases gradually. Prices drift up, arbitrageurs sell, prices drift down. Functions like steam valve releasing incrementally. But now, valve welded shut, $283 spread on gold, $13 spread on silver. Broken ledger in Chicago, locked vaults in Hong Kong. No remaining mechanism to equalize pressure, so when market opens, price cannot drift higher gradually, it must teleport. My prediction for Sunday night is straightforward and terrifying. Violent repricing event. Genuine possibility of silver gapping up $20 in first 10 minutes. Not 20 cents. $20. Why? First trade will not be speculation. We'll be covering panic. Imagine you manage hedge fund short 500 silver contracts. Left Friday confident because price crashed to 90. Then weekend, saw CME data vanish, Hong Kong lockdowns, spread explosion. Realized you are short an asset that does not exist in available supply. Must cover immediately or face forced delivery of metal you cannot purchase at any price. Opening bell, slam buy at market. Do not care about price, want out. What happens? Everyone hitting same button, same microsecond. Who is selling? Nobody. Arbitrage bots offline from hack, mining companies withholding supply, smelling blood. Dealers under maintenance, wall of buy orders colliding with vacuum of sell orders. Price must jump vertically to level where someone finally sells. In this broken market, that might be 120, 140 or higher. We will see vertical green candlestick looking like software error. But it will be most honest price discovery in 50 years. However, darker scenario lurks, force majeure. If CME genuinely cannot reconcile books, if Salt Typhoon breach corrupted ownership records where they cannot determine who owns which bars, they possess nuclear option. Declare force majeure event. Suspend trading. Force every contract holder to accept cash settlement. Announce we cannot deliver gold. Here is check for Friday closing price. Attempt to pay $90 for silver trading at $130 in Shanghai. Ultimate rug pull. Defaults futures market without calling it default. Eliminates short squeeze by changing rules. If this happens Monday, if you see trading halted or cash settlement only, do not celebrate the check. That check is confession that paper market catastrophically failed. Contract was never legitimate claim on metal, was claim on broken promise, and if they force cash settlement, What will people do with fiat currency? Panic. Sprint to physical market to purchase actual bars. But physical market already empty, so street price of tangible metal will completely detach from settled price of broken exchange. World where CME price frozen at 90, but you cannot purchase real silver for less than 200. Bifurcated reality. This Monday chaos is inevitable consequence of the hack. Whether genuine or false flag is irrelevant, result identical. Trust shattered. Bridge burned. Global market now collection of warring islands. Monday, Paper Island inhabitants attempt escape to Physical Island, discover boats burned and ports closed. When you see Monday headlines blaming extreme volatility on cyber instability, translate. Means the run started. Short sellers trapped with no exit. Price attempting to find new equilibrium where paper no longer accepted as legitimate substitute for metal. $283 spread will not close by United States price gradually drifting upward. Will close by United States price exploding vertically to match reality. Or United States market will simply cease functioning entirely, and we will all quote Shanghai price from now on. This brings us to final verdict. We have examined the evidence. Dark data, impossible spread. Hong Kong lockdown, looming Monday chaos. What do? How survive cyber financial war? You do not fight it with code, you fight it with atoms. So here's the verdict. We have stared into void of dark data. Analyzed $283 spread, defying every law of mathematics and market mechanics. Witnessed digital iron curtain descend over Hong Kong, prepared for violent repricing approaching when sun rises Monday morning. But now we eliminate noise and confront terrifying reality of what this hack represents for you as individual investor protecting wealth in collapsing system. Understand that in modern finance, cyber attack is ultimate get-out-of-jail-free card for bankrupt institution. Bank runs out of money under normal circumstances, must declare bankruptcy. Messy, public, congressional hearings. People go to prison. But bank gets hacked, suffers critical infrastructure event attributed to foreign adversary like Salt Typhoon, suddenly not incompetent. Victims, freezing withdrawals not default, prudent safety measure. We have your money, promise we do, just cannot allow access because need to scrub servers for Chinese malware. Might take week, month, year. This is what we witnessed today. Technical issues at CME, not glitch, shield. Maintenance in Hong Kong, not updates, lock. Using cyber warfare narrative to implement capital controls without legislation, freezing emergency exits because a theater on fire without enough extinguishers. $283 spread is smoke billowing from underneath door. If you hold paper silver ETF, unallocated pool account, futures contract, you're in danger zone. Clutching claim ticket for coat check that burned down. When force majeure hits, when system admits metal is not there and never was, claim ticket worthless. Best case, they pay out in rapidly depreciating fiat, while actual metal trades at premium you cannot access. Lesson of this weekend, brutal but simple. If you cannot hold it in your hand, you do not own it. If counterparty stands between you and wealth, that counterparty is now single point of failure. Hack-proved digital ledgers can be erased, manipulated, switched off, but you cannot hack physical silver coin in your safe. Cannot erase gold bar with code. Cannot turn off buy button on metal existing in three-dimensional reality. This is why spread exists. Market pricing counterparty risk, telling you ounce of gold in your hand in Mumbai worth $283, more than promise of gold in New York vault. Market screaming exit the system, begging you convert digital illusions into physical reality before cyber lockdown becomes permanent. Entering era of systemic partition, west going dark, east locking down, liquidity vanishing. Monday, price attempting to find truth. Truth will be expensive. Truth is not enough metal exists to honor all paper promises made. Hack did not create shortage. Hack revealed it. Do not be distracted by Salt Typhoon headlines. Do not get lost in technical jargon of reporting errors and system maintenance. Focus on signal beneath noise. Signal is vault is empty. Exits are closing. Only safe harbor is one you build yourself with physical metal in your own possession. This is the Asian guy. The data is dark. The spread is real. The verdict is in. Get your metal out of the system before the system locks you out permanently. It is over. I have been staring at this chart for 3 days. Something is wrong. Something that nobody is talking about. Something that changes everything we thought we knew about Friday's crash. At first I thought I was seeing things. I pulled up the data again, checked different sources, compared multiple charts, but the numbers did not change. And the more I looked, the more disturbed I became. Let me show you what I found. This is silver. Friday's crash, 39% down. The biggest single-day drop in modern history. You probably know this already. Everyone is talking about it. Every headline, every analyst, every YouTube video. Silver crashed, retail got destroyed, trillions wiped out. But this is what nobody is showing you. This is what kept me up for 3 nights straight. This is SIL, the Silver Miners ETF, the companies that actually dig silver out of the ground. Real mines, real production, real businesses with real employees and real equipment. Now here is where it gets strange. Miners always move more than silver. Always. If silver goes up 10%, miners typically go up 20. If silver goes down 10%, miners typically go down 20. This relationship has held for decades. It is one of the most reliable patterns in commodities. On Friday, silver crashed 39% from its peak, the most violent drop in history. If the pattern held, miners should have crashed 60%, maybe 70, maybe even 80. But they did not. Miners dropped only 22%. I stared at this chart for hours trying to understand, how is this possible? The entire silver market is collapsing. Trillions being wiped out, retail investors getting destroyed. And the mining companies, the ones whose entire business depends on silver prices, they barely moved. It made no sense. And then it hit me. Smart money did not sell. Think about this for a second. The institutions, the hedge funds, the pension funds, the family offices, the people who manage billions of dollars, the people who have teams of analysts, the people who have access to information that you and I will never see. They did not panic. When silver was crashing 39%, when retail traders were getting margin calls, when portfolios were being liquidated across the world, the big players looked at their mining stocks and said, no, we are not selling. Why? Why would they hold mining stocks when silver is in free fall? Why would they not dump everything and run for the exits? There's only one explanation. Because they knew something we did not. They knew the crash was not real. That thought kept me up all night. If the crash was fake, if smart money knew it was coming, if they positioned themselves perfectly while retail got slaughtered, then there has to be evidence. There has to be a trail. So I started digging, and what I found made my blood boil. Welcome to the hidden economy. If you are new here, I expose what is really happening in markets while everyone else is distracted by the headlines. Subscribe right now because this is the kind of analysis you will not find anywhere else. And if you find value in this video, smash that like button. It helps the algorithm show this to more people who need to see it. Now let me show you what I discovered. In my last video, I showed you how the crash was scripted. 72 hours, Tuesday to Friday. A perfectly coordinated trap. On Tuesday, Trump signaled a weak dollar policy. Every trader in the world heard the same message. Weak dollar means strong precious metals. The trade was obvious. Hedge funds piled in. Retail traders went all in. Billions of dollars moving in one direction. On Thursday night, silver hit $121, all-time high. Euphoria everywhere. People were talking about $200 silver, $300 silver, early retirement. Then Friday morning, 6 a.m., before markets even opened, Trump announced Kevin Warsh as the next Fed chairman. Kevin Warsh, a strong dollar hawk, the exact opposite of what Trump signaled on Tuesday. Tuesday, weak dollar. Friday, strong dollar Fed chairman. Same president, opposite signals, 72 hours apart. The traders who shorted the dollar on Tuesday were now forced to buy it back. The traders who bought silver on Tuesday were now forced to sell. Forced reversal, forced liquidation, 40% destruction in 6 hours. And somehow, while all of this was happening, the mining stocks barely moved. If you have not watched that video, link is in the description. It shows you the full 72-hour timeline, but today I'm going deeper. Today I'm showing you who did this, the names, the documents, their documented criminal history. Let me start with something that most people have never heard of, spoofing. Spoofing is a form of market manipulation where a trader places large orders they never intend to execute. Here's how it works. Imagine you want to buy silver at a lower price. You place a massive sell order. Thousands of contracts. It looks like someone is about to dump a huge amount of silver on the market. Other traders see this giant sell order and panic. They think someone knows something. They start selling too. The price drops. Then, at the last second, you cancel your fake order. You never actually sold anything, but now the price is lower. And you buy at the cheaper price. That is spoofing. It is illegal. It is fraud. And for over a decade, the biggest banks in the world were doing it in precious metals markets. And they got caught. Between 2008 and 2020, 5 major banks were convicted of rigging gold and silver markets. Not accused, not investigated, convicted. Found guilty, hundreds of millions of dollars in fines. Let me read you the charges. JP Morgan Chase. September 2020, the Commodity Futures Trading Commission issued an order for manipulative and deceptive conduct and spoofing that spanned at least 8 years. Hundreds of thousands of fake orders designed to move prices. The fine? $920 million, the largest penalty ever imposed by the CFTC. But it gets worse. The traders who did this did not just get fined, they went to federal prison. Michael Nowak, JP Morgan's head of precious metals trading, convicted of racketeering. Racketeering? The same charge they use against organized crime, against the mafia. Greg Smith, JP Morgan trader, convicted. Jeffrey Ruffo, convicted. Christopher Jordan, convicted. These are real people, real names, real prison sentences for running a criminal enterprise inside one of the biggest banks in the world. And JP Morgan was not alone. Scotiabank, caught. $127 million fine. HSBC, caught. $76 million. 9 years of cheating. Deutsche Bank, caught. $75 million. They were rigging markets since 1999, 15 years before anyone noticed. Morgan Stanley, caught. 5 banks, all convicted, all fined. And guess what? Not a single one went out of business. Not a single one lost their trading license. They paid the fine and went right back to work. This is not conspiracy theory. This is court records, government documents, public filings that anyone can look up. For over 2 decades, these banks were manipulating precious metals while regulators looked the other way. They only got caught because of whistleblowers. And even then, the fines were pocket change compared to their profits. 920 million sounds like a lot. But JP Morgan made over $40 billion in profit in 2020 alone. The fine was a rounding error. Now, here's the question that kept me up at night. Do you really think they stopped? A bank pays $1 billion fine. Their traders go to prison. They admit to running a criminal enterprise for 8 years. And then what? They just decide to play fair? These are the same people. The same desks, the same strategies, the same incentives. The fine was a cost of doing business, a speeding ticket, a line item in the budget. Let me show you what I found when I looked at Friday's data. This is the COMEX delivery report from January 30th, 2026. The exact day of the crash. This document is published every single day by the CME group. It shows exactly who is trading, who is closing positions, who is taking delivery. Most people have never seen this document. Most people do not even know it exists. But it tells you everything. Look at this column. It says stopped. In futures trading, stopped means contracts that were closed, positions that were exited. If you were short and you stopped a contract, you closed your short and took your profit. Now look at line 6061, JP Morgan Securities. Stopped. 147 contracts. 147 contracts close on the exact day of the crash. Let me explain what this means. When you are short silver, you profit when the price goes down. JP Morgan had short positions. On Friday, silver crashed 39%. And at the exact bottom, JP Morgan closed 147 contracts. They exited at the lowest price of the day. Maximum profit. Perfect timing. Now think about this. Thursday night, silver was at $121, all-time high. Every analyst was bullish. Every headline was positive. 12 hours later, silver crashed to $75. $46 erased in a single session. And somehow, JP Morgan knew exactly when to close. They did not close on Thursday when prices were high. They waited. They did not close in the middle of the crash when it could have bounced. They waited. They closed at the exact bottom. The same bank that paid $920 million for rigging silver, the same bank whose traders went to prison for manipulation, the same bank that admitted to hundreds of thousands of spoof orders. That bank just happened to time the exact bottom of the biggest crash in history. You believe that was luck? Now look at who else is on this document. Morgan Stanley, 31 contracts, stopped at the bottom. Deutsche Bank, 58 contracts, stopped at the bottom. HSBC, 60 contracts, stopped at the bottom. You seeing the pattern? The same banks, the same names, the same players who were convicted of rigging precious metals, all closing positions on the exact day of the crash, all exiting at the exact bottom. This document is public. Anyone can access it. It is on the CME website. I did not hack anything. I did not bribe anyone. I just looked at data that is available to everyone. The evidence is right there, in plain sight. When I first saw this, I had to read it 3 times. I thought I was misunderstanding something. There had to be an explanation. But there it was, in black and white. The same criminals, the same timing, the same playbook. And now I understand why the miners did not crash. Smart money knew. The institutions knew. The funds that hold mining stocks, they knew this was not a real collapse. They knew it was manufactured. They knew the banks needed to cover their shorts. So they held. They did not panic. They watched the paper market burn while they sat on real assets. Miners down 22%, while silver crashed 39%. That is not a coincidence. That is a signal. But wait, the evidence does not stop there. Let me show you what the CME did after the crash. The CME group runs COMEX. They set the rules. One of those rules is margin requirements. How much cash you need to hold a futures position. On Friday, after the crash, CME announced margin hikes. Saturday morning, less than 24 hours later, they announced another round. Starting February 2nd, margin requirements are going through the roof. Gold, up 33%. Silver, up 36%, platinum, palladium, everything. Massive hikes across the board, 36% increase, overnight, no warning, after already hiking on Friday. Let me make sure you understand how insane this is. If you are holding a silver futures contract, you need a certain amount of cash in your account. If margins increase by 36%, you suddenly need 36% more cash. Most traders do not have spare cash lying around, so they get liquidated, forced to sell, whether they want to or not. Higher margins equal forced liquidations equal lower prices. Now here is what should disturb you. If CME wanted to prevent volatility, they would raise margins before a crash. They would cool down the market before it gets out of control. They would reduce leverage when things are getting frothy. That is what a responsible exchange would do. Instead, they raised margins after the crash, then raised them again the next morning, then scheduled another hike for the following week. Think about that sequence. Friday, silver crashes 39%. Retail gets destroyed. Friday night, CME raises margins. Saturday morning, CME raises margins again. Sunday, CME announces more hikes for Monday. They are not protecting investors, they are finishing off the survivors. The crash took out everyone who was leveraged long. Now the margin hikes are taking out anyone who held on, anyone who thought about buying the dip, anyone who still has a position. This is not risk management. This is a coordinated execution. And it tells me something very important. Someone big is in trouble. Think about it. Why would CME raise margins twice in 3 days to emergency levels? Why 36% overnight? Because someone is underwater. Someone has massive losing positions. Someone is about to default. And they are scrambling to protect the clearing system from the fallout. The crash on Friday was not selling. It was not profit-taking. It was not a correction. It was a forced liquidation bloodbath designed to save someone big at the expense of everyone small. Now let me put this in historical perspective, because what I am about to show you proves this is not random. This is not market forces. This is a playbook. This is not the first time they have run this exact play. 1980, silver ran from $6 to $50, 800% gain, regular people making fortunes, the Hunt brothers trying to corner the market, everyone talking about silver. What happened? CME created Silver Rule 7 out of thin air, banned leveraged buying overnight, changed the rules in the middle of the game, no warning, no explanation, just new rules that destroyed anyone who was long. Result? Silver crashed from 50 to 10, 80% destruction, thousands of investors wiped out. 2011. Silver ran from $8 to $50. Another massive rally. Social media buzzing. Retail traders piling in. The silver squeeze movement was born. What happened? CME raised margins 5 times in 9 days. 5 times in 9 days. 84% increase in margin requirements. Result? Silver crashed from 50 to 26. 50% destruction. It took 13 years to recover. 13 years, and now 26. Silver ran from $26 to $121. The biggest rally in history. Social media on fire. Retail investors euphoric. What happened? CME raises margins before the crash, raises them again during the crash, raises them again after the crash. China raises margins at the exact same time. Fed chairman announcement timed for maximum damage. Banks close their shorts at the exact bottom. Result? Silver crashes 39% in a single session. The fastest destruction of the three. 1980, 2011, 2026. Same pattern, same tools, same playbook, same destruction. Every time silver threatens to break free, every time regular people start making money in precious metals, every time the price starts to expose the weakness of paper money, the same script executes. Once is an accident, twice is coincidence, 3 times is policy. And that is exactly why smart money held their mining stocks. They have seen this movie before. They know how it ends. They know the price always recovers after the manipulation. The miners are telling you something. They are not selling. They are holding. They are waiting. Because this crash was not real. It was paper manipulation. Manufactured chaos. A coordinated attack to shake out weak hands and let the criminals exit at the bottom. The physical market knows the truth. On Friday, when COMEX said silver was $75, dealers around the world were selling physical silver for $120 to $150. A 40 to 100% premium over the paper price. If silver was really worth $75, why were buyers paying double? Why were coin shops sold out? Why was there a line at every dealer in America? But here is where it gets even crazier. I want to show you something that happened this weekend. Something that tells you everything you need to know about the state of the physical silver market. Golden State Mint, one of the largest private mints in America. They just shut down silver sales for the entire weekend. Their statement, quote, "Not able to secure silver," end quote. Let me say that again. One of the biggest mints in the country could not get silver. They had to stop selling because there was no metal to sell. The last time this happened was during the COVID panic in March 2020, when the entire world was falling apart, when people were panic buying everything, when the financial system was on the edge of collapse. That is the only other time in recent history that a major mint had to shut down sales because they could not source metal. And it just happened again, this weekend, right after Friday's crash. Think about what this means. The paper price says silver is worth $75, but the physical market is so tight, so stressed, so completely broken that one of the largest mints in America cannot even buy silver to sell to customers. If there was real silver available at $75, do you think Golden State Mint would shut down? Do you think they would turn away customers? Do you think they would publicly admit they cannot source metal? No. They would be buying every ounce they could find and selling it at a premium, but they cannot find it because it does not exist at these prices. The paper market and the physical market have completely disconnected. The paper price is fake, the physical price is real. And the gap between them is not just wide anymore, it is broken. Friday did not just crash the price, Friday shattered the physical silver market, and the cracks are spreading faster than they can contain them. Now let me tell you what I think happens next. The shorts have covered. JP Morgan closed their positions at the bottom. The other banks followed. The manipulation has served its purpose. The weak hands have been wiped out. Retail traders who bought on margin are gone. Leveraged positions have been liquidated. The market has been completely cleaned out. But here is what they cannot control. The supply situation has not changed. Silver is not optional. Solar panels need it. Electric vehicles need it. Every phone and computer on the planet needs it. You cannot build the modern world without silver. Demand is exploding. Supply is flat. And that did not change on Friday. Friday's crash did not create new silver mines. It did not reduce industrial demand. It did not change anything fundamental. All it did was transfer silver from weak hands to strong hands at artificially low prices. And now the physical market is breaking. Mints shutting down. Dealers sold out. Premiums through the roof. This is not what a healthy market looks like. This is what a market under extreme stress looks like. I think the recovery is going to be violent. When this turns, it will turn fast. The same algorithms that drove it down will drive it up. The same leverage that wiped people out will make fortunes on the way up. And the physical shortage is only going to get worse. Because every crash like this one drives more people to buy physical, more people to take delivery, more people to remove their silver from the paper system entirely. The banks can manipulate the paper price, but they cannot print physical silver. And right now, the physical market is screaming at the top of its lungs that something is very wrong. But I also think something bigger is coming. The margin hikes tell me someone is in serious trouble. You do not raise margins 36% twice in 3 days unless someone is about to blow up. The coordinated timing tells me this is global. The physical market breaking tells me even more. When a major mint cannot source silver, when premiums are 50 to 100% over spot, when dealers are turning away customers, that is not normal volatility. That is a system under extreme stress. Something is breaking behind the scenes. I've seen these patterns before. In 2008, in 2020. The stress always shows up in strange places before the big crash hits. And right now, the stress is everywhere. In the margin hikes, in the physical shortages, in the desperate timing of the Fed chairman announcement, in the coordinated actions between CME and China. I believe a major market event is coming in the next few months. I do not know exactly when. But when I decide to exit completely, I will say it here, publicly. Like I always do, a lot of people will regret not paying attention sooner. Now let me leave you with this. 5 banks convicted. Hundreds of thousands of spoof orders. Traders in prison. And on Friday, they closed their shorts at the exact bottom. The miners did not crash because smart money knew. The physical market did not crash because the paper price is fake. Golden State Mint shut down sales this weekend, could not source silver. The last time that happened was COVID. The physical market is breaking in real time. 1980, 2011, 2026. 3 times in 50 years. Same playbook, same destruction, same recovery after. This is not a free market. This is a crime scene. The question is, what are you going to do with this information? If this video opened your eyes, I need you to do one thing. Send this to someone who lost money on Friday, someone who got liquidated, someone who is sitting at home right now wondering what happened to their portfolio, someone who deserves to see the evidence before they make their next move. That is how we spread the truth, one person at a time. Drop a comment below. After seeing this evidence, do you still trust this market? Are you holding? Are you buying? Are you getting out? I read every single comment. Your feedback motivates me to make more exciting videos. If this is your first time here, subscribe right now, hit the notification bell, because the next video might be the warning that saves your portfolio. You can also join my channel if you want detailed price action analysis. I bring regular updates on gold and silver so you can stay ahead of the market moves. I will keep digging. I will keep exposing. I will keep you updated. This is the hidden economy. The fraud is exposed. The evidence is clear. The names are on the record. They want you to panic. They want you to sell. They want you to give up and walk away. They want you to believe the paper price is real. It is not. That is how they win. That is how they have always won. Crash the price. Create fear. Buy from the panicked at the bottom. Do not let them shake you out. Now watch what happens next.